Today, I thought would be a really good time for us to talk about whether or not Bitcoin and cryptocurrency investing is healthy for first time investors. Because following this recent crash, there's been a real increase in the narrative that Bitcoin and other cryptocurrencies don't have any intrinsic value. Or if they do have intrinsic value, it's so far disconnected from their price right now that all you're investing in is hot air. And eventually that has to deflate, the bubble will pop, and this will be a very poor experience for many first-time investors, leading to them never wanting to invest again. And this is exceptionally true for millennials because a lot of millennials, unfortunately, were hit the hardest by the 2008 global economic financial crisis because a lot of them were first-time homeowners and they owed more on their homes than they were actually worth. And a lot of them were just coming out of college and there was no jobs available for them because companies simply could not afford to train new employees. In fact, a lot of them couldn't even keep on old employees that were already trained. So unfortunately, they had a very poor first experience, millennials that is, with the financial world. They had a very bad start. And as a result of that, they don't really trust the financial system as we know it now. And that political ideology is also affecting whether or not they want to invest in Bitcoin, as it promises to exist outside of that system. So I really wanted to talk about this today and whether or not this is a net positive effect or if it's going to end up maybe not being so great. So if you're interested, make sure that you check out the article that corresponds with this video as well. It's going to be on 3 different platforms if you didn't know: Steemit, Medium, and Seeking Alpha. Maybe, depends on whether or not they publish it. So make sure that you check out those if you're interested. But let's go ahead and get started here. Bitcoin has had a real interesting impact on the younger generation, as it is often their first experience with investing. A recent study found that over 30% of millennials would prefer having $1,000 worth of Bitcoin than stocks or bonds. Now, whether or not this survey is actually fair is an entirely separate discussion because I don't think it was worded the best and I don't think the sample was really that reliable. However, the point is still valid. A lot of the younger generation is more entranced with Bitcoin than traditional financial investments. Is this a net positive, or should we be concerned about the effects this might have on the longer term future? Now, I thought it would be a little bit better if we start off with the downside here. A lot of younger investors in Bitcoin have unrealistic expectations when it comes to returns. A lot of them see 10% in a month as an unexciting sum of money because really 2 reasons. One is that their gross investment amount tends to be small, maybe like $1,000. So, 10% is $100. That's not a huge difference. It's not going to make a difference in somebody's lives a lot of times. So they don't really see it as that much. And then secondly, we've seen Bitcoin go up 50% in a month multiple times. So as a result of this, we see a lot of first-time investors in Bitcoin have idealistic and sometimes completely outrageous expectations when it comes to returns. And this is even worse for people who invest in riskier altcoins, which is any cryptocurrency other than Bitcoin, some of which are akin to penny stocks, which is really funny if you think about it because Bitcoin is already risky as is, but some of these other cryptocurrencies are far riskier. And I'm obviously not talking about, certain other cryptocurrencies are fine, but there are people that are investing in the equivalent of penny stocks in an already very risky market. Furthermore, a lot of first-time investors who begin with cryptocurrencies have a very limited perception of risk. And given the fact that the market has been in an extended bull trend for over a year now, and given that over 50% of existing market participants haven't been in the market for longer than a year, if you look at Coinbase user growth and if you really just look at the volume growth on all sorts of different exchanges, a lot of these investors have really not experienced any substantial losses, and really not until recently. Until just this past month, there really hasn't been that many big drawdowns in Bitcoin that haven't been immediately reversed. And we don't know, maybe the same thing is going to happen here as well. So a lot of them have profits that outweigh their initial investments in a ratio of 10 to 1, meaning that even if the market saw a decline of 80%, they still would have performed or outperformed the stock market, which has been booming. So it's easy to stomach risk in moments like this where the market crashes when you're playing with profits. And this is sort of a common gambler's fallacy, and one that I even find myself susceptible to. A dollar of profit is no different from a dollar that you initially invested, yet mentally we seem to perceive them as different. And so the only group of people who have seen their initial investment dwindle, aside from the people that overtrade and try to day trade and, take advantage of situations and kind of, death by a thousand cuts, is really those who bought since December, where Bitcoin spiked to 20,000, and we've been seeing it trail off since. However, even among the demographic that may have bought Bitcoin at 20,000, there's an even smaller group who is experiencing major losses because altcoins, that is any other cryptocurrency aside from Bitcoin, have been booming during this decline. So that means any individual who bought at the peak back at 20,000 in December but had money in altcoins is either still in the black or their losses really aren't that high. In fact, we've been seeing a shift in what I would call the market narrative, where an increasing number of individuals are saying that Bitcoin is dead and its technologically superior altcoins are going to take over, which really suggests to me that a lot of investors have substantial altcoin positions, and the demographic with major losses is actually a lot smaller than it might seem. Now, the fact that so few have losses in this market is a key argument for why cryptocurrency investing is a net negative for first-time investors. Their expectations for returns aren't realistic, and their perception of risk is warped by a gambler's fallacy that playing with profits is no different than playing with initial investments. It isn't a far cry to say that cryptocurrencies are a bubble, and I certainly would argue that, when we see cryptocurrencies like Tron, which have an obtuse white paper, which is arguably plagiarized unless it was a translation error by the volunteers, no product, and copied code, received valuations in excess of $10 billion due to marketing hype. Even Bill Gates, if he was trying to build a cryptocurrency that had no product yet, actually, if it was a cryptocurrency, it would see an absurd valuation. But if he made a, startup and VCs and early seed investors were trying to value it, they wouldn't give it a valuation of $10 billion at the concept stage. This speculative behavior that we see isn't investing, and it will only lead to the eventual pain and suffering. If you just look at the recent price action, this is a vindication of that idea. Now, while I agree with this, that eventually there is going to be a lot of pain and suffering when the bubble pops, I think there's more positive elements to cryptocurrency investing that we really should be focusing on. And this goes beyond just the fact that it attracts new talent that really can improve it for the future. I'm talking from a wealth perspective as well. First and foremost, a lot of financial advisors can attest to the fact that the biggest reason that people aren't able to comfortably retire is because they don't save any money. This isn't exactly a revelation here. Dave Ramsey, for those of you that are familiar with him, is likely the biggest testament to that, who he uses it sort of as a strawman argument to distract you from the fact that he talks about that 12% mutual fund figure that he talks about all the time, even though it's complete nonsense. But despite all that he gets wrong, this particular element he is completely right about, and I completely attest to it. And I even recommend people to listen to him because a surprising amount of Americans just don't save any damn money. And the story doesn't change as you go to a global perspective. Those of us that are in the financial world, right? Those of us on Seeking Alpha, for example, we're so focused on investment optimization, maximize returns, minimize risk, achieve diversification benefits, allocate to the right asset classes at the right time, figure out when to go domestic versus international, when to go developed or emerging markets, how to hedge against interest rate fluctuations or loose monetary policy. But the reality is that as long as you're saving and paying down debt, you're a step above everybody else, at least the average person. The mission statement of many financial advisors is just to pass on this simple idea, even if it meant that they got paid less. And this is where Bitcoin and cryptocurrencies, I think this is really where the positive element comes in. The more experienced among us like to point out that the illusion of high returns and low risk is ultimately going to result in a catastrophic and life-damaging event for many young investors. However, it is the very illusion of these returns that is encouraging them to invest in the first place. And you say, hold on a damn second. Hold on. That's just stupid. Of course that's why they're investing. If you can make a ton of money, why wouldn't you? But when, and not if, the bubble pops, they'll become so disillusioned with investing that they'll never want to participate again. Just look at all the people who recently invested in BitConnect and saw that Ponzi scheme completely collapse. We must protect them from this inevitable situation. They will blame everybody but themselves. Whales manipulated the markets. The governments don't want to see it succeed. The banks tanked the prices. The media is conspiring against us. The exchanges manipulated the prices. Yada, yada, yada. No one ever takes responsibility for anything that they didn't exercise discipline to achieve. And I agree with you. When the bubble eventually pops, fingers will be pointed everywhere. And many investors aren't going to accept that they themselves were responsible for the gross mispricing of nearly all cryptocurrencies, especially given that many are fueled by political ideologies, which makes it difficult for them to accept that financial reality can be different from that. And just as they bandwagoned into cryptocurrencies, they will also bandwagon against whatever the masses determine as the primary cause for the bubble popping. They will scream FUD, and they will blame the weak hands for being so easily manipulated. But don't let this reality deter you from an even greater and more valuable truth. Many people are deferring spending and investing instead because of cryptocurrencies. If you've been involved with Bitcoin for longer than a week, you've likely heard about the very, very expensive pizza that continually changes in price as Bitcoin changes. It's a rather stupid story, given that Bitcoin would never have the value it has today without people using it back then when it was worth fractions of a cent. But the impression it leaves on people is still relevant today. Why spend money on anything when you can save it in Bitcoin and have more in the future? Even Tai Lopez uses this story for his marketing schemes. Now, funny enough, this concept is true for all investing. You could replace Bitcoin with literally any other investment: stocks, bonds, real estate, personal businesses, so on and so forth. But as they say, everybody has their price. And in this case, price is returns. And stocks just aren't that interesting enough to people that only have $1,000 to invest, at least a decent amount of them. How many teenagers have you heard say, oh boy, $100 in a year if I get lucky? Guess I should hold off from buying that very expensive Xbox One, PlayStation 4, or whatever the hell we're on now, and all this other nonsense. Bitcoin, on the other hand, the absurd returns that we see are enough to make anyone, even teenagers, take a step back and seriously consider whether they should make a new purchase or not. People are starting to take a small portion of their paychecks and devote it to cryptocurrencies. How much do you want to bet that portion of their paycheck would have been spent instead if they weren't investing in cryptocurrencies? Do you really think that they would have bought stock instead or paid down debt? And therein lies the important revelation for those of us who know that these returns won't last forever. Even after the bubble pops, many people, even those that bought at a peak, will be wealthier than they otherwise would have been. Now, obviously, it's going to be a mixed bag. Some people are investing in cryptocurrencies entirely in lieu of stocks or paying down debt. Some are even going the extra mile and taking on debt to invest even more. And if you're doing that, stop. Now, those individuals will likely come out less wealthy than they otherwise would have been. Some will even go bankrupt. But the net effect should be positive. I also suspect that a number of individuals who are exceptionally successful in cryptocurrency investing will likely move on to more traditional investments as they see their portfolio move from 4 figures to 5 figures to 6 to 7. Some people really are hitting that 7-figure, right? There comes a point where even a teenager will see 7 to 10% in a year, I guess arguably lower if you look at recent stock market projections. as attractive with a large enough sum of money. And funny enough, it's not even like the stock market is all that cheap right now either. Furthermore, those who have a first time investing experience in Bitcoin and other cryptocurrencies are probably going to have a much stronger tolerance for volatility than most stock market investors. Losses in excess of 30% are common, which in stocks is catastrophic. Many folks who have invested in cryptocurrencies for longer than a few months generally really aren't even that fazed by movements like we've seen in the last few days. And they may be less prone to make financial, emotional decisions. Although, admittedly, I do wonder how these people will react when Bitcoin doesn't recover in a month like it has every single time. However, this volatility should better prepare them for future recessions and bear markets in traditional financial assets whenever they might occur. All in all, I think that while investing solely in cryptocurrencies is certainly not a prudent financial decision, at least in a fundamental sense, it is welcoming a whole new class of investors to the world. And while when the bubble pops, it will leave a bad taste in most of their mouths, I think many will likely be more wealthy after the bubble pops, even if they bought at the peaks. And the reason why is because many people investing solely in cryptocurrencies were never allured by traditional investing in the first place. I just mentioned at the beginning of the video that these people, a lot of the millennial generation that are first-time investors, had a horrible experience with the traditional financial world in 2008. I mean, they were just born at the wrong time, right? So a lot of these people would have either done one of two things. Either A, they would have spent the money instead, or they would have saved it in cash. Now, some of them might have been better off just saving it in cash instead. We don't really know what that's going to be. Obviously, if you bought at a peak, cash would be the better performing asset. But in general here, I think that they would perform better because obviously spending money is a negative 100% ROI, given the fact that, first of all, resale value tends to be horrible, but more importantly, everybody's too lazy to sell anything that they no longer need. And we just are all big hoarders, right? So for those who get a taste of what investing can do for them, I think they might consider investing into the more traditional world of investments, especially given that a number of influencers, which again somehow I've become, encourage people to make that decision. And as with all matters, cryptocurrency investing really isn't as black and white as some people make it seem. I mean, really here, people are just so extreme when it comes to this stuff. In many cases, it will behave as a crucial stepping stone into the world of accumulating wealth and achieving financial independence for many people. Now, some lucky people will achieve that before the bubble pops and they'll be able to secure it. And congratulations if you're one of those people. But even factoring those people out, I still suspect that cryptocurrency investing is a net positive for our younger generation. And I have spent a while thinking about this. What are your thoughts? Let me know in the comments below. I'm seriously interested. As usual, I hope you guys enjoyed this video. Make sure that you check out those 3 platforms that I mentioned at the beginning of the video. That is Steemit, Medium, and Seeking Alpha. I will be interacting on all of them, probably on Steemit the most because there's a fiscal incentive for me to do so, but I will be checking them all out. Make sure that you do so as well because there's probably going to be a scattering of comments on all of them. And then in addition to that, make sure that you check out my Twitter if you want to keep up with me and see live updates. Let me know your thoughts, seriously, in the comment section below. Thank you for watching.